This is Connie Saunders with Foreclosure Freedom Network. Today I'll be going over the differences between the various hardship options that you can choose from and what that will do with your credit score and future ability to get a loan. It's important to be able to think with the concept of this in order to come up with the right solution sometimes. A homeowner who loses a home to foreclosure is ineligible for a Fannie Mae-backed mortgage for 5 years. And if it's an investment property that they let go to foreclosure, they won't qualify for a Fannie Mae-backed investment mortgage for another 7 years. And there's talk to let this go on indefinitely as unqualified for a Fannie Mae mortgage. In the future, when filling out a loan application, you'll have to answer yes to question C in section 8 of the standard 1003 form that asks, have you had property foreclosed upon or given title or deed in lieu thereof back to the lender in the last several years? This will affect also interest rates that you've got on various cards and things like that. So it can definitely negatively affect you for over 3 years for a foreclosure. And foreclosure will remain on public records permanently, and on one's credit history it remains for 10 years and more. With a short sale, however, the homeowner will be eligible for a Fannie Mae-backed mortgage after only 2 years. And also, if he's looking for investment property, again, he's eligible for a Fannie Mae investment mortgage after 2 years. There isn't any declaration on loan applications that have a question about doing a short sale. Only late payments on your mortgage will show up on your report after the short sale, other than paid as agreed or paid as settled as agreed. That type of communication will appear, but and every once in a while you will also have a comment put in there, paid as agreed, short of amount. But even if that is on there, it's not nearly as bad as a foreclosure, not even close. So your score may be lowered a little, 50 points or a little bit more if it's other things. If your payments are not all being made, your credit card payments and whatnot, it can lower it much more. Basically, your credit can be restored in 12 to 18 months, essentially, after that. There isn't a specific report item for the short sale on the report. So basically, the impact on your credit is a lot less. Also, with the Home Affordable Foreclosure Alternatives Program, one can get cash for keys as well, and this could be $2,500 to $5,000 in homeowner assistance to move onto another location. Make sure if you're doing this that you're working with another realtor that knows how to apply for this, knows how to put this on the line, so that you're not getting this assistance just because it wasn't requested in time. Also, you can call the lender yourself and arrange for the Home Affordable Foreclosure Alternatives for you. That's perfectly fine. There's no restriction on that. You don't have to have your realtor do that. But if you are using a realtor that you trust, do check with them that they know what they're doing and that they have done that. And make sure that you are nudging that up and getting actual confirmation on phone calls made and more specifics. Basically, you can lose the assistance if you don't ask for it. So once you've ensured that it's all being done, it should be relatively cookie cutter. But with loan modifications, as another word, it has much less impact on your credit score. If you can get a loan modification, sometimes it allows your credit score to go up, because clearly it was very, very clear on the report earlier that you had a negative amortization loan or whatever, and seriously damages people's credit. So, because of the likelihood of going into default, you're obviously a target public, the key public that it is suspected that not only will you go into default, but you'll also foreclose and you'll have hardships, and certainly nobody's going to offer you any kind of credit, and quite often rates only go up for the short term. So that's why I would definitely, if you're planning on, let's say you have a mortgage that that's 125% of the current market value of your home. If you can afford to stay in that, or if you can get a loan modification and that allows you to afford to stay in that extra 25% you might find after time isn't that big of a deal. When you're going to get loans nowadays, with full doc loans, people are going through hell and high water in order to get these loans approved. Um, Quite often, if you own your own business, or part of your income is, your husband or wife is an independent contractor, makes commissions, variable interest, it can be quite difficult in today's age with full doc loans to get a loan. And they'll want on that kind of income 2 years of supporting evidence. So it's not like you can get a job and now use that income and get a loan. No. You've got to have 2 years of that income. And of course, the down payments quite often have to be at the 20% range or higher, if you have any questionables on your history. So bottom line on that is that if you can stay in your home, it's a good idea to try. As time goes on, more options, better options are being offered to people. On the Home Affordable Refinance Program, if you can just get your credit back into good shape, you may qualify for that. A lot of lenders are offering these programs now and weren't last year. There's different opportunities coming up every day. There will eventually, hopefully, be reductions in principals allowed, and hopefully also with lenders officially joining in on this home affordability and stability plan and signing contracts with the government on it, they are having to start actually complying with those issues. They've got it's somewhat transparent, and there's going to be oversight and corrections if somebody's not doing it right. And part of the thing is they do have to offer reasonable workouts. And again, I think you've seen that if you are diligent in getting a workout, that you may be able to qualify for one that could end up being better than a new loan for 100% of the value that is at 6% interest, that type of thing. So if you just consider it that way, I would definitely plan on staying in your home. Don't just jump ship because your home is a little bit underwater. Welcome to the club. All right, well, that's all for now. Thank you very much. My name is Connie Saunders, and our toll-free number is 877-333-4506, and the website is www.foreclosure.com. foreclosurefreedomnetwork.com. And if you go there, you can see transcripts of these different videos so that you can actually follow along with. Thank you very much. Have a great day.